is not a incentive to hold dollars. That's an incentive to sell dollars, because the interest that you earn is not high enough to compensate you for the purchasing power that you lose. And so when investors figure this out, I think the dollar is going to fall sharply, and that's going to exacerbate the problem that the Fed is dealing with, because the strength of the dollar limited the rise in consumer prices in the United States in 2022. So even though prices were up a lot, they would have been up even more had the dollar not been strong relative to other currencies. Well, if the dollar really weakens in 2023, that's going to add additional upward pressure to already rising consumer prices.
We don't want to scare you during this time of the year. However, if you really want to know the reality, then it's pretty harsh. Perhaps now people are preparing for the new year and Christmas. However, they are unaware of what the new year will bring for them. Unfortunately, 2022 showed us how things could go bad. But 2023 is going to be the year which will show us the extreme picture. Peter Schiff, the chief economist and founder of Euro-Pacific Asset Management, author and analyst, has warned about a worse recession and inflationary depression in 2023. The inflation, currency devaluation, sinking savings, energy crisis, and possible recession in 2022 have already made us quite a pessimist. However, 2023 will unfold the worst we can imagine. Let's listen to what Peter Schiff has to say about the disastrous things coming our way. Let's get started. Who is the man who had predicted the 2008 financial crisis? Well, Peter Schiff was the man who was so certain about the financial crisis that he started warning the Fed and wrote a book as well so people could be prepared for the crisis. However, no one believed that a financial crisis was possible. Many economists took a recession and collapsed out of the question simply because they were too idealistic about the market. However, Peter Schiff was a realist and is still today. This year, Peter Schiff warned that a recession would hit, and in the third and fourth quarters of 2022, he finally announced that we are in a recession. However, the same as before, economists didn't believe him. Even today, no one is ready to believe that we are in a recession. Perhaps that's due to the fact that they don't know what a recession looks like. All the things happening today, where markets are declining, USD is falling, and prices are skyrocketing, point toward a recession. However, economists and financial watchdogs are not announcing this, and people are still under the illusion that the recession has not come. If that's the case, no one will believe that a worse recession will hit in 2023. But Peter Schiff said that the recession of 2022 has boiled things for 2023, and now people should be prepared for the collapsing markets in 2023. In 2008, before the recession, no one believed that. But after the recession hit, even ordinary people could see that those economists went back to revise the data, and then they announced that we were in a recession. This will happen again in 2023 when economists are reluctant to announce. But people should know that a recession will be there. But why would there be a recession, an inflationary depression in 2023? Here's a little reminder to like the video if you were loving it. And if you don't want to miss videos about the evolving economics and the financial order, subscribe to our channel. Let's continue now. People often say that 2022 has been going well and will continue in 2023. However, they should know that all the leverages we had in 2022 won't last in 2023. Peter Schiff said that the U.S. experienced positive growth in 2022 due to oil exports that it got from the strategic oil reserves. It exported that oil and bolstered its reserves in 2022. However, those strategic oil reserves won't last long. In 2023, the U.S. won't have those oil reserves. Thus, oil exports will stop, and so will the inflowing capital. Without capital, the Fed will face heavy pressure. But this will be further agitated by the USD devaluation and the international market. This year, as Peter Schiff said, the USD saw exceptional growth compared to other currencies. Due to this, the U.S. got leverage and reduced its trade deficit. Simply because the USD was performing great, the U.S. had to pay less for the products it imported. At the same time, it had to be paid more for the products it exported, which together strengthened the U.S. economy. However, as Peter Schiff said, the USD has started losing value lately, and this will continue in 2023. In other words, when the USD price declines, the trade deficit will increase, and the U.S. has to use extra USD from its reserves to pay for the same products. Moreover, strong economies would start selling their USD and their reserves as the investors would do. No one would want to keep a declining currency and lose its value. It will worsen things for the USD, and its price will decline further. Listen to what Peter Schiff said about that.
Or not. Maybe it's a depression, and that would be the way that they would end up being wrong. But if you remember, the Great Recession started in 2007. But I was doing interviews on popular shows in mid-2008, and they were saying there's no recession. So what happened was all these economists went backwards and revised down all the data, and then they said, okay, I guess we were in recession. They didn't even think a recession was coming. But the fact of the matter is we were actually in one at the time, and they couldn't even see that. And I think this is the same situation today. You know, we actually had negative quarters. The first two quarters were negative. The third quarter, in fact, you know, we got some numbers out on that today. I mean, it was up maybe 3% or so. But all of that was due to the improvement in the trade deficit during that quarter. And a lot of that resulted from the fact that we were able to export a lot of the oil that we were pulling out of the Strategic Petroleum Reserve. But we're going to exhaust that reserve sometime next year, so that's not going to be able to offset our trade deficits. But also, we had the big rise in the dollar. Well, in the fourth quarter, we've had a big fall in the dollar. It hasn't lost all of its gains yet, but I think it will in 2023. But as the dollar weakens, that's also going to push up our trade deficits because it increases the cost of all of our imports. So I think the help that we got in Q3 was a one-off quarter. We may end up with a negative print for Q4, we'll see, but I think we're going to get quite a few negative prints in 2023 as more air comes out of this bubble. And then I think it's going to be very hard for the recession deniers to continue to put a positive spin on this economy. They're going to have to admit that we're in recession. The question is the Fed going to change course as a result of that admission, or is it going to continue with the rate hikes and quantitative tightening, making a bad situation worse, which is what it should do. But the question is, will it do that?
Without the strategic oil reserves and strong USD, the recession would be more obvious. And then even the recession deniers have to accept that the US is in a recession. But why would the USD weaken? The Fed has been increasing interest rates, which should encourage people and even countries to hold the USD. When everyone holds the USD, its price increases. However, Peter Schiff said that even if the Fed increased interest rates, it didn't bring any positive results. He said that for the time being, the USD became strong not because of the interest rate hikes, but because of people's beliefs. The market believed that the interest hikes would bring inflation down and bring things back on track. And these expectations worked and made the USD strong. The promises the Fed made were really sold back then. But now the market is seeing the reality that inflation isn't coming down. Therefore, instead of holding the USD, they are selling it because the benefit of selling is more than the interest rates. Now in 2023, this reality will be further uncovered, and everyone will sell off their USD. In turn, this will not only weaken the US economy, but also exacerbate prices. Listen to what Peter Schiff said.
The real reason that the dollar rose was not just that rates rose.
Okay.
But that the markets believed that these rate hikes were going to work, in that they were going to bring down the inflation rate. The Fed said that we're going to return inflation to 2%, and we're going to do whatever it takes to make that happen. And the markets basically took the Fed at its word. And so they bought the dollar on the idea that these high rates were going to produce positive real returns for dollars. But I think as the markets come to terms with reality that despite the rate hikes, inflation is not going down to 2%. In fact, it's more likely to head higher after this brief dip that we've had. And so that even though the Fed has raised rates, rates are still negative from a real term. And if you have negative real interest rates, that is not a incentive to hold dollars. That's an incentive to sell dollars, because the interest that you earn is not high enough to compensate you for the purchasing power that you lose. And so when investors figure this out, I think the dollar is going to fall sharply, and that's going to exacerbate the problem that the Fed is dealing with, because the strength of the dollar limited the rise in consumer prices in the United States in 2022. So even though prices were up a lot, they would have been up even more had the dollar not been strong relative to other currencies. Well, if the dollar really weakens in 2023, that's going to add additional upward pressure to already rising consumer prices.
But what is inflationary depression and how it will take over in 2023? During all the previous depressions, the prices of assets, commodities, and products went down. So even if the markets were declining, collapsing, and breathing their last, people had a sigh of relief. They could buy products and necessities at lower prices. Something to note here is it was due to the gold standards. Gold was backing up currencies because we are talking about the 1930s. But what is inflationary depression and how it will take over in 2023? During all the previous depressions, the prices of assets, commodities, and products went down. So even if the markets were declining, collapsing, and breathing their last, people had a sigh of relief. They could buy products and necessities at lower prices. Something to note here is it was due to the gold standards. Gold was backing up currencies because we are talking about the 1930s. This doesn't mean that the declining prices of goods brought depression. Rather, the case is otherwise, where the depression brought the prices down. However, now, we don't have gold at currencies back. Therefore, during the depression of 2023, when the government and people won't have money, the Fed will print more of it and keep things balanced. However, this will cause excessive inflation while, at the same time, we will have depression as well. Hence, unlike before, when depression brought necessities prices down, now depression will bring in more inflation. That's what is called inflationary depression, and this is what will happen in 2023. Listen to what Peter Schiff said.
In the 30s, we were on a gold standard, so we had real money, and so we had a depression, but prices came down. And prices coming down was actually a good thing. It provided some relief to people because the cost of living went down, the value of money went up. But a lot of people think that the reason we had a depression was because prices went down, which is not true. Prices went down as a result of the depression, but it didn't cause it. And in fact, it did provide some relief. But the whole idea that if prices are coming down, we should worry that it might cause a recession is nonsense. It's like trying to blame the rain on wet sidewalks. They have it in reverse. But what's going to happen during this inflationary depression is going to be very different because we're not on a gold standard anymore. We're on no standard. We just have fiat, and the government's going to print even more of it to try to prop everything up and bail everybody out and prevent politicians from having to make the difficult choices of cutting government spending. They're just going to print money and give it to the government so they can spend that. So it's going to be very different. I think that the nominal level of a lot of stocks, those prices are going to go up for a lot of stocks. But in real terms, if you price them in gold, they're still going to go way down. So stock prices are going to come down in terms of real money, but they're going to go up in terms of funny money. Now, some companies' stock prices won't go up because these companies are going to go bankrupt. And so they go out of business, the stock is zero.
Which sector is going to go bankrupt most? Which sector is going to go bankrupt?
Well, the companies it's not necessarily any specific sector. Companies that don't make a profit, that aren't going to be able to survive. And also companies that are relying on advertising, that don't really have a product that they price, but they're just like living off now they might not go bankrupt. Maybe they can reinvent themselves on a smaller scale and try to find a way to pay the bills. But also there's a lot of companies that are going to have to downsize or reduce their scale to try to find the point where they can operate properly, on a smaller scale. But there's been a lot of stocks too that were so inflated during the bubble that they still need to fall dramatically, even if inflation is there. The prices of these stocks still have to come down a lot. But there are a lot of companies that the stock price is going to go up. Now, unfortunately, most Americans don't own those stocks, or they don't have a lot of money in them because they have all their money in the bubble stocks, because the bubble stocks were the ones that were delivering the best returns on paper, and that's what everybody was chasing. And unfortunately, those stocks dominate the indexes. So it's possible that the S&P 500 could end up lower at the end of the decade because of the weighting of those stocks. But within the S&P, within those 500 companies, there's going to be a number of them that go up. The key is to.
What do you think? Will a more catastrophic recession and inflationary depression hit in 2023? or will things start to come back on track? Do you agree with Peter Schiff on the worst possible era of market and inflation in 2023? Comment your opinions in the comment section right below. Do you want to watch more videos like this one? If yes, please like and share the video and subscribe to our channel for more videos on the latest economics and financial news. Until the next video, stay tuned.